All right, ladies and gentlemen, I hope you had a wonderful day. It was an awful start to the week, and we woke up with carnage absolutely everywhere. The markets were down, the bonds were down. There was absolutely terrible manufacturing data, the worst since 2020. There's not too many metrics you've got back going that far, but then the dollar rocketed up 1%, and middle of the day we got to hear from Fed Waller, and it was not what everybody was expecting, and it looks like the Fed is fighting back. So we got a lot to talk about. We have a bunch of plays. I made a ton of different trades today, from biotechs down to natural gas, even some oil plays, and then you even had a big deal with the JetBlue Save merger, but we're going to go over all of that, a recap of today, and then what we got to watch out for tomorrow. So drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. We will see you there live in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down.
Right off the bat, like I said, the Fed is fighting back, and we got evidence of that today with Waller, but now we have like 4 or 5 other Fed speakers for the rest of the week. So what exactly happened today with Waller? Here is the crux of all of it. If you don't remember, a couple of weeks ago, literally right around the time that the Fed came out and Powell was very dovish, Waller was the one who was advancing this idea of, hey, we're ready to start cutting, because he was pretty bearish. Then he said, you know what? Things are better than expected. In the last month or so, he has been pretty bullish. So when he came out today and was talking about, well, maybe we don't need to cut that many times this year, and definitely not as fast as other people thought, you immediately puked, and the market was already red. It bounced up a little bit, but then after Euro close, we kept sliding down. And if you go down to the bonds, right when Waller spoke, he eliminated any sort of rebound, because the bonds are already down like 1% in the morning. So this was a big deal, because pretty much somebody that you've had who has been very dovish on the Fed as of late, he came out with definitely a different script, and now that's what we have to be watching for the rest of the week. So you're going to hear from Bostic, Fed Jefferson, I think Fed Williams, and a couple of others. There's a whole different list of them, but whatever they say this week, if they start all echoing Waller, we may get a shift, and the thing you got to be watching for is the rate cut odds. And now this is where it's going to get tricky. This is why the market has been down, but not down. We're still above 4,700, right below all-time highs, but then we go down, everybody freaks out. It all has to do with the rate cut odds. So right when Waller spoke today, the March rate cut odds, they dropped about 10%, and they actually stayed down there. But now, even December, those rate cut odds started to come back. This is a very big deal, and what we're watching for is to see if this sticks tomorrow with the data, whatever data we get on Friday, even the earnings. If you remember last week, anytime we started getting data that would move the rate cut odds, what would happen? 30 minutes later, an hour later, they would all get bought up. That didn't happen today, but let's see if that actually starts a trend. So the Fed is fighting back. We're going to find out the whole game plan as we listen to every other Fed speaker, but now coming into key number 2, this is what's going to lead you into tomorrow. The dollar was a problem today, and moving forward, if it really starts getting crazy, maybe we'll see it start affecting the markets. We talked about this one yesterday. We were saying the dollar is the number 2 asset of the year, but here's where things get a little bit interesting. Crypto went down today. The dollar shot up over 1%. It might be the best performer so far, but now if you see how the dollar has moved, some people have been asking, do you think the dollar is leading to the downside? I do think the dollar is going to be a snitch, but now with how high the dollar is and looking at the market still being high, I mean, if you were going to follow the dollar, the last time the dollar on the DXY was at a level like this, I think the market was trading around 440 on the SPY. JPY. That means if the dollar keeps going up, or really if we wanted to catch up to the dollar, we would have to start dropping a lot. And then if you come down to the bonds, last time the bonds were here, it was around beginning of September. I mean, where were the markets at around that time? You were just slightly higher than the 440. So both signals, bonds and the dollar, are saying we should be much lower. But once again, the rate cut odds are being sticky. We have earnings on the way, and people aren't panicking just yet. So that's what we got to watch out for tomorrow. And now with the dollar in hand, we do have data, and that is going to be retail sales. And after the Fed today, and if they start to get a little bit more hawkish, I do think this is going to have a pretty big reaction tomorrow. Pretty much with what we had today, a strong print will be very bad for the bond market. It'll probably make the dollar go up. If retail sales is strong, it is only going to confirm what Waller was saying. But on the other hand, if we get a soft retail sales print tomorrow, maybe that's an opportunity for the rate cut odds to bounce back up, and then things calm down, and before you know it, the market keeps doing its thing. So that's the final key right now. The market in musical chairs are back. If you haven't realized by now, it has been almost a month of teetering at the highs. No exaggeration. Today is January 16th. If you go see where the market was, you have been trading in this same level of going up to a new high, selling off pretty quickly, melting back up, melting back down, melting back up, but you are still holding this generally bullish level, and that's why when the volatility is arriving, you probably haven't noticed, it arrives and disappears very quickly. The VIX was at the couple-week low just a couple of days ago on Friday. Today, it starts to hit near a new year high. So the story is still the same. We have to watch if anything changes or if that data finally pushes over the edge to get the narrative to change. But for the meantime, I would just be watching the levels, watch the momentum, keep an eye on bonds in the dollar, and if you are using stop losses, you may want to widen them because you're getting one move forward, one move back, one move forward, one move back, and we are still holding the same range. So, Chad, I hope you're ready for it. Hopefully, we get more answers tomorrow with the retail sales and some of the earnings, but now let us get into the plays. So, right off the bat, I got a bunch of different plays, actually. I'm going to go over 4 trades. I did make a couple of trades that we'll go over after, but the first one, I got to start with Save. This is Spirit Airlines. We got the news very early. If anything, we just saw the airline stocks moving very quickly, and Save, they dropped as low as 60% on the news that the JetBlue merger is getting halted by the Department of Justice. They're saying antitrust concerns. They are not going to allow it to go through. Even Biden is hailing it as a victory for lower cost for airlines, because if you don't remember, I think it was Frontier or JetBlue, they said once they acquire Save, there's not going to be anything or no such thing as a low-cost airliner. So they had that news. It was bad for the stock. People were getting worried a little bit about Save going into bankruptcy, and they're saying, well, without the merger, Save can't handle it. And on a very small amount of shares, it was like 6 million shares, but compared to the rest of the day, it was very tiny. They dropped 60%. So what I ended up doing, it was the very bottom of it. I bottom tick this at 586. I grabbed 200 shares and I said, hey, I think it's going to be an overreaction. Even if it does get clapped, I'm willing to risk about $1,000. So I decided to go ahead with it. But then as the stock started bouncing, at one point we were up by 40%. And what I decided to do was the strategy I was telling you guys about not too long ago in selling covered calls. The difference was I owned the shares and they went up a lot. So I said, hey, let's sell a covered call. I went to the January 1250 contracts and I sold 2 of these at $3 a pop. So if you don't know the main story, I bought 200 shares for about $1,000 and then I agreed to sell those 200 shares at $12.50 and I got paid $600. So even though I bought the shares at $5.85 or $5.86, my cost basis is now $2.86 because I collected $3 a share on that. So it helped protect me. Even if the stock comes down after hours into tomorrow, it's going to allow us to play it a little bit, but I really like that play there. However, I don't know about getting in now after it is moved 40%. We just got a really good bottom tick, but the next event with this stock that I'd be watching out for, it's going to be the news in terms of how much money they will be getting from JetBlue now that the deal is not going through. There is a breakup fee. People knew about the regulators and that it possibly wouldn't go through, and JetBlue said, hey, we're going to pay you guys as reassurance that this deal is going to go through and that we wanted to, and they have been paying shareholders over the last, I think, a year or so, I guess year and 2 weeks at this point. So there's a lot in there. I believe they would be getting like $300 or $400 million back from JetBlue if the deal doesn't go through, as well as get to keep any of the money they've gotten so far, which at this point, I think it's about $3 and some change per share. So we'll see how it all plays out, but that is play number one. I would keep an eye out for that. Then play number two, this one is going to be an interesting one. They have earnings, but they don't always move too much, and I did make a play on them today, but TSM. So, one, they have earnings on Thursday morning. That's what I like about it, and I did make these option trades. They seemed pretty cheap. I just did the basic 2 standard deviation move. If you aren't familiar, go watch the video. We'll go over this one a little bit more as we get into the earnings, but the thing about this one, they did not move a lot today. Them and Intel, these were some of the chip stocks that did not go absolutely nuts, and if you saw AMD, NVIDIA, Micron, even WDC, a lot of these chip/tech companies, they went pretty crazy, and some of them did not move at all. So I took this as an opportunity to play the earnings play, and what I ended up doing, I'll give you the play if you don't want to go and try to understand it. I only spent $120. I grabbed 2 of the next week January 93 puts at 30 cents each, about $60 to the downside, and then I grabbed a January next week 108 call for 65 cents, only one of them, for another $60 to the upside. My logic here is if they move more than expected, we can make some good money on it. And again, out of any of the other plays last week, only one of them hit. But in this case, I said, hey, there's a lot of activity in the tech space. Maybe we'll get lucky. But if you go through TSM's chart, man, I'm sure you will notice this thing does not really have big earnings gap ups or gap downs, and that is going to be the problem with that play. So watch out for that. That is play number 2. And then play number 3, I had to go within a liquid bio. I went about 3 weeks, unless you want to count EYPT, but RGNX, they had a wet AMD drug, and they are partnered with Abivi, but they came out today. There's an event going on. It's called the Hawaiian Eye. It's one of these biotech events. They announced the data. It looked very good. People got a little bit excited, not too much. I'm hoping there's a follow-through. If you remember any of the other biotechs the last couple of weeks, they've been coming out with data at these events, and they've been running 30-40%. So it's a drug that I know about, and I really like it. It's partnered up with Abivi. They got the event. I said, hey, let me go for some. And recently it has sold off like $5 a share, so it's not like we top-ticked it too much. But to justify that, because I said I want to avoid some of these liquid plays and liquid biotechs, I had that EYPT from a couple of days ago. I was playing it for a buyout. We had 11%. It was like $400. I said, all right, well, if I'm going to buy a new one, let me sell out of that one. Took profits on that, and now I am holding RGNX. And like I'm saying here, watch out for that Hawaiian Eye event. Maybe you get a lot more updates in the morning or even throughout the day. So that is play number 3. And then finally, play number 4. I told you I got 4 today. I went with natural gas /QG. This is the micro contract. I went for 2 of them, but for next month, and they're a lot cheaper than the front month contract given what's going on. But we've been talking about the cold weather and a lot of these events.
Order
and
submitted.
We said it was going to be a weird game of musical chairs, and really this drop today of like 12 or 14%, it's either going to be the killer candle or it's going to be a reload. We either get to go back in time, get to reload off of the hype, and then if the weather keeps
Order
going crazy
submitted.
and more stuff plays
Order
out, it keeps
filled.
getting colder, things are going to start running. Otherwise, it's going to keep getting colder, and everyone's going to say it's all priced in, and then everyone's going to start accounting for that, and then by next month, once things get warmer, it'll absolutely get destroyed and then return back to where it was going in the first place. So watch out for that play. I think it's probably the most riskiest out of all of these, even the /QGs, even though they're micro. The natural gas futures move a lot intraday, and you could move a lot. I think I would drop like, 4 or 5 cents on natural gas, and that was a $200 move. So keep your eyes out for that and watch out for that. But as far as everything else, I did make a flip on oil today. We bottom ticked it, sold it out, got almost $1,000 on a future, and then I messed up, bro. I sold out of the Boeings. I sold out of both of them. It was actually a nightmare. Where is it? Oh, and the Delta. You could see a lot. But that Boeing 215, we bought this at $1. I thought it was going to scam in the morning. The stock was down like 4%. I said, nah, they're going to make it bounce up. The options didn't open up. And, well, I sold it out for $550. It closed at $1,500. You could have made $1,500 from $100 on that play. I sold out early. GG if you got that. But remember, I had a secondary play at the 200. I waited a little bit more throughout the day. Where did it go? And that play we only got for $80, and I was down. This play dropped as much as 20 cents, and then it shot back up. I was like, I don't know. I'll sell out of this one too. We'll stack up some of the profits. Got $1.28. That one went up to another $2, and then the Delta. This was one of those 2 standard deviation earnings plays. We hit it. We only bought this play for 20 cents, I believe, or 30 cents. It was actually very cheap, but I sold out for $2.15, made it where all of my earnings plays were free. They went as high as $3.50, and then they came down to about $2.30 at close. So either way, it still closed higher than when we sold out, but I just sold all of these way too early within the first minute or so, and that ended up killing me. But then I had some of the city plays, got like another $12 back since now we've paid for all of last week's earnings play. I thought it was good. And then MSOS, this was the weed play we were holding. This was another 2 standard deviation play, but it wasn't related to earnings. We bought them for 30 cents. They went up to 80. We were in the money. They expired this week. I said, let's clean them out. Got rid of those, and then I bought 10 AOKs for 5 cents there. It was a dud play. I was trying to play the news before we knew what was happening with Save. Got out of that one, and then I bought the, what's it called? The TSM ones, and then the RGNX, and that was pretty much it for the day. Again, we made those oil plays. Everything else I'm still holding. Not too much craziness, but a lot of action to start off the week. Pretty crazy. But now we'll see where tomorrow takes us. But that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember this end of the watch list, Philo. It doesn't matter who the president is. The long term will always do good forever. The long term will go beyond any president. These stocks have been around longer than any administration. So don't you ever forget that, and don't get too caught up in the hype. But Chad, I love you. Drink that water. Stay hydrated and healthy. I'll see you in the morning, and peace out. Horn.
I don't expect the Fed to cut rates until the second half of next year.
The higher for longer doesn't matter to the equity markets.
The rally we've seen in equities, in the last 3 to 4 weeks, it's been a spectacular sort of very short rally.
As we look out to next year, we think the S&P 500 can hit 5
Target filled. Stub filled. Order filled. Target filled. Target filled.